welcome you all. This is Professor Ahmed Aysan. I'm joining from Qatar, from Hamad bin Khalifa University. I'm very delighted to be moderating this session on central bank digital currencies and fintech. We have very distinguished speakers from Singapore, from South Africa. So thank you very much to our speakers first for kindly accepting our invitation to be part in the panel. So that is the benefit of COVID-19. We have speakers from all over the world, very distinguished speakers. Professor David from Singapore and Ms. Hawa from South Africa. So today we will be talking about the central bank digital currencies, digitalization in finance, and it is very much in line with the theme of the overall event, money and money tech. So central bank digital currencies, other cryptocurrencies, I'm sure people are wondering about, and also application of these ideas into banking in financial markets on fintech. So I don't want to take too much of your time because we have very important speakers and we have only 30 minutes. So let me start with the Ms. Hawa. But before starting, let me briefly introduce her. Ms. Hawa bin Han is a universal consciousness being dedicated to service and transforming values and existing models of business, leadership, and partnership. She has 3 decades of ideation and disruption experience in the alternative investment, consciousness capital, and international partnership and humanitarian and development area. So she is not just one directional for sure. She is both in practice, in finance, and also in the humanitarian side. Ms. Hawa is the founder of Habika Trust, Merit Group Companies, Ametrine, and Beats Transformation NGOs. So her CV is quite long, but she's a practitioner in finance and very important. She has very important activities in the social area. So we would like to benefit more from today her on the fintech area. So without further ado, let me pose my first question. Ms. Hawa, again, thank you very much for being with us today. It's a great pleasure. So could you give us some information about the fintech developments in South Africa that could help the Turkish financial sector also to benefit from?
Yes, thank you very much, Professor Aysan, and it's it's a privilege to be here and to be sharing with yourself in Qatar, David in Singapore, and our colleagues in Turkey. I would say that, I mean, in light of all the things that have been happening in the world and what we've been seeing in Palestine, so we'd say that South Africa 27 years ago and more was where Palestine is, and how that system of legal oppression and alienation shaped our financial services industry, where it resulted in having 2 worlds: a first world, very established world-class financial services sector, and a third world, very underdeveloped, marginalized, alienated sector. And in terms of the first world, South Africa is one of the leaders in emerging markets in financial services. We have a very established stock market and very vibrant, and financial services contributes about 22% to our GDP. In the third world sector, which is about 30 million people who are not having access to the mainstream financial services products and services, etc. And that 30 million population is also a representation of what's happening in the rest of Africa. So what fintech has done is that it's acted as a disruptor, as an enabler, and creating a nexus and a point of convergence for payments, lending, savings, deposits, insurance, investment products, etc. So, and what it's done it's actually also acted as a bridge in bringing the first world market and the third world market together. And so a huge part about fintech is about financial inclusion, and that financial inclusion is actually talking to the SDGs, the SDG 8 and SDG 10, about economic growth and economic inclusion. So there's been lots of very exciting activities that has been taking place. We find that in the digital banking space, we have 3 very established players, because South Africa, again, because of its history, it shaped the structure of our economy and our financial services. So we have very dominant and monopolistic financial services players. And of course, the startups and the fintech players that have come to disrupt that market. And what we found in South Africa is that the established players are actually embracing and are investing in the startups and entering into partnerships with the new players, etc. And then another thing that maybe a lot of the global audiences may not know is that Naspers, which is a South African-based global multinational that's actually the largest owner of Tencent, is a large global investor in the fintech space, and we see that via Prosus that's listed in the Netherlands and in Johannesburg, etc. And also in terms of South Africa's play within South Africa and globally, that we actually have featured in the top 50 global fintech, where one of our fintech players called Wealth Migrate created a very interesting online portal where they create access to global real estate investment opportunities, etc. And then we have two other players that featured in the top 50 emerging stars, which is Easy Equities, and where ordinary citizens with a minimal investment can participate and access the stock market and become participants in there. And then we have Zuna, which has now become and is rising prominently in Africa, headquarters in South Africa, and it's created a mobile microfinance platform. So that's what I would say is, in a nutshell, where South Africa is in terms of the context, and also that we have a large informal sector and we have a large African diaspora who are refugees, and how the fintech sector is playing a role in terms of the remittance, mobile money, access to finance for the informal traders, etc., which I can share a little later. But that, Prof. Aysan, I'll say, is a nutshell, is what's been happening in South Africa and how it's contextualizing in the context of Africa.
Thank you very much, Ms. Hawa. So we start from South Africa. Now we will move to Singapore. Professor David, thank you very much again for joining us today, for kindly accepting to be in the panel. Just before getting into the question, let me introduce you. Professor David Lee Kwa Chuen is the professor of Singapore, professor at Singapore University of Social Sciences, and he is an adjunct professor at the National University of Singapore. His other appointments are the founder of Block Asset Ventures, the chairman of Global Fintech Institute, vice president of Economic Society of Singapore, co-founder of Blockchain Association of Singapore, and council member of British Blockchain Association. He has 20 years of experience as CEOs and independent directors of listed and tech companies. He is a consultant and advisor to international organizations on food supply chain, blockchain, fintech, and digital currencies. Professor David actually has one of the first book on the handbook of cryptocurrencies, and I know that he has a fintech institute in Singapore giving fintech services. I will ask that question at the end, but he is quite an influential person in the fintech area, and also especially in the blockchain and cryptocurrencies. Today, I will ask Professor David mostly on central bank digital currencies. So again, Professor David, thank you very much for being with us. And let me ask my first question. What types of central bank digital currencies may benefit the excluded more than the others?
First of all, Professor Ahmed, thank you very much for inviting me to this conference, and it's such a privilege to be sharing some of my research with everybody and having a discussion with like-minded esteemed panel members like Ms. Hawa. That I think the question about CBDC is very important, especially in terms of including the individuals who are unbanked, underserved, as well as corporates that are being excluded. I think a lot of time when we talk about CBDC, we tend to focus a lot of payment efficiency. And we tend to forget that the mission of central bank is to have a secure, stable financial system by serving as many people as possible. Because if you just serve a few people or a few institutions, by definition, is going to be very difficult to be stable. So, in a financial system to be stable, you have to include as many people that matters, and also to include many new institutions so that they can create jobs to create a stable society that will fit over to a stable financial system. So when you asked that question, I thought this is one of the most important questions for CBDC in my research, and because there's a direction that I've been working on, and I've been watching a lot of discussion, and it is not surprising that a lot of developing countries behaving slightly different from the developed financial markets, because the developed financial markets are doing very well. They do have an efficient payment system, and they do have a lot of things going for them. Unfortunately, in the developing economy, a lot of this so-called emerging financial centers do not have the kind of digital infrastructure that the developed market that they have. And in the process of the development over the last 10 to 15 years, and because of the increase in compliance costs, the cost of running a lot of this very developed system has also gone up. And when the costs go up, naturally the cost is passed on to the user, and therefore a lot of institutions as well as individuals are excluded, even in the developed markets. So to answer your questions, it is important to revisit the questions of how do we have a new digital currency and a new payment system, electronic payment system, that we could include as many people, include as many corporates, lower the trusted third-party costs, so that these savings can pass on to the people, and people can afford to join the system, both as corporate and as individual. Allow me to give an example. If you look at the Project Bakun from Cambodia, it is very interesting. It redefines the definition of financial inclusion. Because when we talk about financial inclusion, the first thing we think about is the unbanked, and how do we reach out to serve them. But this is also about the organization who are serving them. And unfortunately, the new innovative payment companies are usually excluded from the clearing houses. They are excluded from the real-time settlement system. And the reason why they are excluded is because these innovative, new trusted third-party payment companies are not as well endowed. And when you have a clearing house and there's a lot of settlement risks and there's a lot of counterparty risks, naturally the regulators will require them to have a liquidity pool or a so-called reserve being deposited at the central bank. And when that happens, it will indirectly increase the cost of this corporate, and you only allow those well-endowed financial institutions, namely the banks, to join. But the question is that we have a lot of fintech companies which may not be so well endowed, and they can serve the underserved a lot. So financial inclusion has taken on a new meaning in Cambodia, and for CBDC, in the sense that financial inclusion is not only about serving the underserved, it's also not excluding the new and innovative fintech companies. And I think Cambodia has demonstrated that by using blockchain technology, they are able to tokenize some of this, their own currency called real, and also they have tokenized the American dollars. So you may not call them CBDC, you may call them central bank approved digital currency, because they are not issued by the central bank, but they are initiated by the central bank and approved by the central bank. So instead of CBI, central bank issue digital currency, which appear as a liability in the central bank balance sheet, the central bank approved digital currencies are tokenized real and tokenized US dollar that have very little settlement risk And therefore, when it comes to that, you do not need to have a clearinghouse. You do not need to have a elaborated real-time settlement system, because the blockchain system itself are able to include the new corporates and also allow to serve the underserved directly. So that's my answer to you, that if you are designing a system, okay, that allow for corporate inclusion as well as individual inclusion, that is perhaps the most important mission for the new CBDC. And it doesn't matter if it's a CBA, which is approved by the central bank, or CBI, which is issued by the central bank. What we need is a new system, we can call it whatever name, to include as many institutions and as many individuals, that we can have a stable financial system and stable society.
That's great. That's great, Professor David. Because when we think about the cryptocurrencies, central bank digital currencies, we think about them from a more macro perspective. It is between countries, it is about the financial stability of the country, but oftentimes we forget the social implications of using this technology, and this is a very good start to show this, and especially from the academic perspective also, for I know your research, this is quite important. We shouldn't be just thinking about the first initial question of macro questions, but we have to think about the implications for the society. And in there, getting examples from other countries, like the one that you gave from Cambodia, probably it will not be the first country that will come to our minds when we think about the fintech. But there are very good examples. Thank you, Professor David. So related with this, let me move to Ms. Hawa. Africa is also a place that we see many good implementation of the fintech technology. Mostly they are in fintech, but let me go on. What are the most recent developments in Africa, in South Africa? What are the prospects that you see, Ms. Hawa, on the fintech? You are muted, Ms. Hawa. Again muted. Could you press again? Okay.
Sorry about that. That's not an indication of how we're using technology in Africa. It's just me. Thank you for your question, and thank you, Prof. David, for contextualizing the financial inclusion and the opportunity for the fintech players to come in. I think it very much reflects what is happening in South Africa, as I explained earlier about the dominant players. And if I come to blockchain technology and cryptocurrency, and Prof. David, I'm sure you've heard of Luno. Because Luno was bought, it's a South African company established in 2013, and it was bought by the Digital Currency Group, and it now currently has 6 million clients, and it's in 40 countries. And it actually has regional head offices actually in Indonesia, in Malaysia, in Johannesburg, in Lagos, etc. So we're seeing how a homegrown solution is going and offering that, and it actually is operating in countries where cryptocurrency has high take up, especially in the developing countries, etc. And then in terms of just using blockchain, we have what is called SendB, that's actually fast tracking remittance across Africa, and it's also a South African based company. And then again, with the banks being dominant, but not nearly as dominant as what we see in Turkey, we have now 3 established digital banks. The first called Discovery Bank, which is actually the first behavioral bank in the country, because Discovery is part of a health insurance group, and that has a very effective loyalty program. So the back of that analytics and the client profile, etc., is how Discovery launched its first behavioral bank. And the first digital bank in South Africa is Time Bank. And the 3 banks actually, the whole thing is about, it provides actually more trust, and the public's attitude towards it is more engaging than the dominant banks, and that's why they are having tractions. And our last major bank that has been set up in recent times is actually Zero Bank, where there's no transaction costs, etc., which I think the 30 million third world market in South Africa is very sensitive to, and also again because of our apartheid structure, financial services transaction costs were very, very high, and fintech players are now playing an important role in slashing through that and making the market very, very competitive. In the insurance space, again, South Africa is insurance contributes 12% to our GDP. It's a lot more established than, for example, Indonesia, which has 2% penetration. And if you look at Turkey, that also has less than 3% penetration. And we have these dominant players, but we have two very interesting players. One is called Pineapple. And what Pineapple is doing is it's making the products very simple. It's slashing all the management and administration fees, and it creates a very easy access because you don't actually need a physical distribution footprint. And the second in the insurance space is called Naked, and I think maybe it's just showing the vulnerability of the established players, etc. It's offering short-term products, and it creates a lot of incentives. And then also in the insurance space, there's very interesting fintech players where they try to improve the behavior. So you get a discount if you, for example, with your car insurance, if you drive better and you're more responsible in the roads, etc. Then we're also seeing the role of retailers in South Africa and how these retailers that have large footprints in Africa, where they are entering into partnerships with, for example, with Time Bank, etc., and how retailers in South Africa and, for example, a retailer called Shoprite Checkers, which has more than 2,000 distribution footprints in Africa, and it plays the role of actually doing remittance payouts. So someone that's based in South Africa actually makes a payment here, and then the family is able to physically receive the cash, maybe in Nigeria or in Ghana or in Kenya, etc. And we're seeing another big retailer in South Africa called Pick n Pay, and the interesting loyalty programs that it's coming up with together with actually non-sort of lending products, etc. Then we're seeing actually a fusion of the mobile players. And again, South Africa is a country of anomalies. We have very big global companies, or we have very small informal players. So one of our largest mobile players, which is called MTN, which is the largest in developing and emerging markets, and it's in a partnership with Zuna, and Zuna provides microfinance across Africa, and it's headquartered in South Africa. And of course, MTN has this huge database of which Zuna is doing the analytics in the different countries, and on the back of that, with CRM, it's offering interesting microfinance products. And then with Vodafone, South Africa is Vodacom. It has a lending partnership with Lululand. And again, it's providing micro lending products and creating greater access. And then in the unbanked, marginalized, informal sector, etc., a very interesting fintech player called Spool Money, spoon as in spoon, and it's focused on informal female traders. So it's interesting how that the women have become a market in which the fintech players want to meet their needs and address that, etc. And then an interesting player, in the informal property sector, which is an Airbnb for our informal property thing. That player is called Isidulu, and where Isidulu allows the informal property players in the townships, which is the marginalized communities in South Africa where apartheid placed us, and where they are actually providing rental services by just putting up an informal structure, but actually creating a very vibrant market. And then we have, again, the informal spaza shops, which we call spaza shops. They're informal traders. And we have Zande Fintech that actually provides lending to purchase for stock purchases, because you got the small players having to compete against the monopolistic players, and then of course by bringing them together in terms of bulk buying, etc., they get better discounts and they can participate more competitively, etc. So I would say that Prof and David, that South Africa has there's some very, very exciting trends, and of course you can say that it's an Africa play, although a lot of it is located in South Africa. Over to you, Prof.
Thank you, Ms. Hawa. That's why South Africa is quite important, because I mean, we know many of the fintech developments are coming out of the Africa, and South Africa is definitely the center. Some of them are, for example, in Nigeria, there are also quite interesting fintech applications. And I believe, and also overall, we learn the fintech not from the textbooks, because still it is in transition. Professor David has a handbook on cryptocurrencies, and back in 2016, I guess, it was relatively in the earlier periods of the cryptocurrencies. Still we have fintech books, but still many things are in transition. So it is great to learn that this fintech developments are taking, and most of them are actually helping the relatively poorer segment of the society. It enables more competition. It enables more access to finance. So from a development, from the sustainable development perspective, from impact investing and so on, these points are quite important. So it is great that you are sharing your experience from South Africa, from Singapore. For example, the one on Cambodian case is quite interesting. So let me continue with Professor David. Actually, you gave an example from Cambodia, but there is another thing going on in Cambodia. Apparently, they have a stable coin denominated in US dollar, but at the same time, we see Elon Musk of sort of people. They are more embarking on cryptocurrencies from a more ideological perspectives as well. So in a sense, we are really living in a postmodern world. On the one side, it is as if the market can solve all the problems. People will form the communities, and cryptocurrencies, like the private currencies, in a sense, will solve the problem. But at the same time, we see some solutions, even the central bank digital currencies idea is like that. Some group of people are even embarking more on the tokens, central bank currencies, which will even empower the states more. So what is the dilemma here? What is the prospect, Professor David? Do you think that should we be thinking about universal coins rather than the country coins, given that Cambodia has issued stable coin denominated in the USD, while we see Elon Musk is embarking on cryptocurrencies? What is your view on the prospect? What should be the way forward?
I think it's a very interesting question when you raise the word called universe coin, which means that it's beyond Earth. We are living on a small planet called Earth, but I think Elon Musk is thinking way beyond that, and it's not surprising that he's changed the name of his CFO to Master of Coin, giving us some hint of where the future is going. I think in terms of the central banks, they are moving to interoperability. They're looking into quite a few projects in Singapore. The government is looking at Patio project called meaning distribute and share, which is cross-border transaction. And then in Hong Kong, Thailand, UAE, and also the Chinese Digital Currency Institute, they look at the Bridge program, which is the NCBDC. So governments are looking at diminishing themselves by promoting, international convergence of an alignment of interests to have interoperability, not only on payments, but on settlement of digital assets. So you can imagine that everything will probably be tokenized in the future. People tend to think that, the cryptocurrencies are talking about decentralization and government is actually a centralized authority. There is a lot of conflict and there's a lot of inconsistency. But I think if you think deeper, cryptocurrency is just a virtual world. It is important to be decentralized in the virtual world where trust is distributed, and you must not trust anyone that you see on the virtual world because you never really see the true person. Maybe I don't look the way I am in the real person. There's enhancement of how I look. But the thing is that it is important to have a trustless system online, which therefore the trust is distributed and decentralized. But really, when you move to the physical world, we still have physical boundaries, we still have government. So there's no inconsistency in having offline centralized governance with online decentralization. So I think if you differentiate between online and offline governance, you'll find that the interest is aligned. We are all very much aligned, unless the government is irresponsible and the government is not trustable. Then they themselves diminish themselves to be the same as any nodes on the virtual world. Then they deserve to be ignored in that sense, because they're irresponsible and they cannot be trusted. So if you are a trusted government and you are responsible, and then you should retain your centralized authority, but you are not being trusted, then I'm sorry, nobody trusts you, and then you just diminish yourself to just like a virtual world. So I think that is important to think about. But Elon Musk is into a different world altogether. He's thinking about going to Mars. He's thinking about space station. He's thinking about moon. He's thinking about mining in the universe. So I think he's developing a universal coin where when you're in the space, how do you develop a trust? And the answer is probably, well, you have to be backed by a lot of other cryptocurrency. It doesn't matter what you call the coin. You could call it Bitcoin, you could call it CBDC, you could call it Dogecoin or Cat Coin or Kitten Coin. It doesn't really matter, but there must be a distribution of trust. I think if you think in terms of a universal coin, you can think about the future where we're moving into space. And I think we need to understand that there are two things that are very important that's happening now. One is that it's a point-to-point or peer-to-peer communication. We have the mesh network, universal mesh network that can communicate in space, not only on Earth. We are not just talking about telecom company. We are talking about peer-to-peer communication using the mesh network powered by blockchain that is empowered the node. So it's peer-to-peer communication, peer-to-peer exchange of information. That's the first thing that we need to realize. But we also have a very important thing, which is the peer-to-peer ledger, which gives us the peer-to-peer exchange of value. So the first communication is peer-to-peer exchange of information, but the second level is a peer-to-peer exchange of value using blockchain technology. When these two combine together, it is very powerful. It is very powerful because it brings the smart contract and decentralized finance into the picture. And it is not inconsistent with government harnessing DeFi for their purpose. You can see in China, you can see in the economy like Africa, leapfrogging the developed economy because they're tokenizing everything. You do not need money. You just tokenize the cattle, you tokenize the goat, the cow, the fish, the fruits that every country is producing, and we will not be surprised if the developing economy leapfrog the developed economy because they have less constraint. When everything is tokenized, we are back to barter trade, but this time is tokenized barter trade. And you won't be surprised that the government in the developed economy like Cambodia, South Africa, in Myanmar or Thailand or in Philippines or Indonesia, that they tokenize goods and services, and they will be less reliant on the centralized payment system. There will be more, the government will be promoting DeFi, okay, with off-chain centralized governance, but on-chain decentralized governance. So to answer your question is that there's no inconsistency with DeFi, with NFTs, non-fungible token, with centralized governance of government. And I see a lot of government like China, like Cambodia, like Indonesia, like Africa, harnessing the DeFi and the NFTs for their own objectives of leapfrogging and serving more people with new fintech models that we'll be seeing. And I think Ms. Hawa has just shown us that the fintech companies are really innovative. So we will see that. And even if you look at US SEC, they're talking about democratizing investment because central bank do not have the authority to say that what is the best investment that can give you 50,000, 100,000 times return. And SEC is admitting that perhaps we should democratize investment because it is not the business of central bank to decide what investment will give you the best return. Who knows, right? And therefore, it is important for us to rethink the entire regulatory framework and start to embrace DeFi, NFTs, and the rest. And I don't see any inconsistency in that. In fact, I see Elon Musk breaking new ground because with GameStop, with Dogecoin, it's a whole new world. People who are not having the hope of owning a place that they live, they need to find an outlet to make some returns for their own retirement. That's my question back to you, is that are we sure that as central bank, we know what is best for our own people, especially in terms of investment?
Thank you, Professor David. That's why this is not just about the technical question, but this is kind of an ideological question as well. I mean, what are the limits of the state? What are the possibilities that the market can generate? And that central bank digital currencies, cryptocurrencies, DeFi, non-fungible tokens are actually making us all think about this. And sure, this is how I started, by the way. I mean, I started working on cryptocurrencies for about 5 years now. But my main interest also to understand what is the position of the state, what are the limits. So this practical aspects are actually making us to be more aware of the nature of the state, nature of the markets. And I believe we will discuss this even more because we are at the very, very beginning. I mean, it is in transition. Even I mean, these non-fungible tokens, many DeFi projects they're just emerging. I mean, we are apparently at the beginning of the history somewhat. I'm not saying that the end of the history came, but definitely we are at the beginning of a new financial history, and it's quite interesting, and we should all follow. And thank you, Professor David. These are very important insights from somebody who's in the field for many years. And it's not just about the contrast; it is also coexistence in a sense. Thank you very much. So let me go back as a last question. So we are a bit short of time. So this is quite actually delightening to have this conversation, but apparently we are given a certain time in the panel. So one last question, Ms. Hawa, and if you like to add some more at the end, but it will be great if you can keep it like 3-4 minutes at most. How does the South Africa fintech play itself in Africa and emerging markets? Because you mentioned in your last point that South Africa is the center of the fintech. And how do you think that South Africa fintech can contribute more to Africa, especially?
Thank you very much. I'm going to pick up on some of the things that Prof. David has shared. And Singapore has a similar history to South Africa and Africa in terms of colonization. And I'm going to start by saying that actually fintech is actually a key tool in the decolonization process, and actually about the reclaiming of the human and the reclaiming of the African, and that fintech enables us to start living with respect, honor, and dignity, and be on a path of wealth creation and economic sustainability, etc. So with regard to South Africa, thanks to our colonizers, we did develop a very vibrant financial services industry on the back of the mining industry. So South Africa plays an important role in terms of being the center for venture capital for the players and the startups in Africa. The second is that we have very strong and established world-class infrastructure. So a lot of the startup players are actually being headquartered in South Africa itself. And if I can just put on my consciousness and activism cap, then I'll say that political activism in our history is being replaced with financial activism, and the fintech is an expression of that. And I have to claim that, that one of our greatest exports is actually Elon Musk. So you say, what is South Africa's role in terms of the fintech space locally and internationally and in Africa? I say, look at Elon Musk, and that will tell you what South Africa has to offer the world. So, so we actually act as the bridge. And again, because of our link in being having very strong connectivity, because we have a European-based population or historical population, and we have an African population. So we have the versatility to actually act as the bridge to attract international investors that can then, that other African players can access, etc. So all this is about actually building the base of the African society. And if I can just share a little bit about the sort of the humanitarian and development work that we are doing as part of the NGO that I set up. It's called Beads of Transformation, and we're now setting up an at Mandelaship Institute with the Nelson Mandela University. And the most marginalized sector of our society is actually the youth. So part of our initiative is we have a youth at Mandelaship School, and financial literacy and financial education and wealth creation at a very young age is some of the offerings that we will be sharing with our young people, and also that we're encouraging them to be disruptors. And as part of that, we will set up a venture capital fund, and we will be on the fintech trajectory to better support them, because the African youth is actually the marginalized, alienated youth. But how can we create spaces of connectivity using fintech and using all the things that Elon Musk talks about, is that we're part of a universal construct. So that, Prof. Aysan, is what Africa is about. We're all about reclaiming self and building the unison and oneness with all our colleagues and friends and our fellow beings in our universal village. Thank you.
Thank you, Ms. Hawa. It's not just about the finance, but it's great to see that you are taking your finance experience, your finance ideas into NGO work. So great to follow, and hopefully we will also hear more about how it will be developing, especially in terms of the social impact. Thank you very much again for being with us. So as a last question, let me move to Professor David. I mean, we always think about this positive aspect, but do you think that there could be something wrong with the central bank digital currencies? And especially, definitely, Singapore is a leading country in there, and what the Singapore is trying to do. If you can give some insights, that will be great. And this is actually related with what you are doing in the Global Fintech Institute. So it will be also great to mention about the Global Fintech Institute along with that. As an example, I believe what the Singapore is trying to do. Over to you, Professor David.
Yeah, I think I can't speak for Singapore, but I can speak for Global Fintech Institute. My understanding of Singapore is that we are focusing a lot on green finance. We are focusing a lot of financial inclusion, and all the new projects are also trying to become a node, a very important node in the whole world, the financial world. So Singapore is always playing this balancing role, but always trying to push the frontier, whether it's in cryptocurrency, tokenization, NFTs, DeFi, green finance, and ESG. So this is always what the central bank is talking about. But as far as Global Fintech Institute is concerned, we believe that the emerging market and the emerging financial centers, like from Asia to Middle East to Africa, we believe that they will leapfrog in the next industrial revolution because of the mobile technology, because of the connection. People are not connected. So mesh network with satellite, Elon Musk is doing, everybody will be connected. In Indonesia, 20% of people are connected by broadband, but once they are 70–80% connected, the impact is huge. So the growth are coming from all these countries. So Global Fintech Institute would like to be part of this growth and transformation, and it's important to have inclusive education. Inclusive education means about digital literacy. Digital literacy is two-sided. The one is that the consumer, the user, will need to know how to use some of this technology. But it is also for technologists who are based in developed countries to understand the design thinking on the ground, because the condition on the ground in Africa, the condition on the ground in Myanmar, in Indonesia are different. So you're a designer, you really have to understand and be educated of what the user needs, what language they use, what are their phobia, what is the culture, what is the language, and so on. So it's two-sided. So the Global Fintech Institute is, again, like Singapore, we like to balance, right? Not only from the emerging market for digital literacy, but also for the developed countries, because they don't understand the problems and the challenges on the ground in this developing economy. So we hope to bridge the gap. We ask for donations so that we could train people in the emerging market. So we have scholarships for them. We welcome all scholarships that help the central banks and also the people on the ground. But we also like to bring the message from the emerging market and say, please understand what China is doing. Please understand what Myanmar is doing. Please understand what Indonesia is doing. Please understand what South Africa and Kenya is doing. And every year, MES and Africa, we have the Afro-Asia Fintech Festival. And I was there, and I was there to learn. I'm learning a lot from the emerging market. It is not that from Singapore we can teach the rest of the world. No, in Singapore we are learning a lot. And please help us to learn how to serve the underserved. Please help us to do research to understand how to make the world more stable. Please help us to understand all the goods and services that we produce, how we can distribute and share with everyone who needs those goods and services, and not let this good be hoarded and be rent-seeking. Rather, we hope that we learn how to distribute all these beautiful goods and services that we have produced to everybody who needs it. So that's how I will end today's.
This is very good, and Professor David, actually, this is a very good approach. That's why probably and I know that you are going to have a certified fintech specialist like CFA, and this is also very good because everybody is interested in fintech, but we don't know how much they really know the market, how much they are following the even. I mean, there are lots of fintech courses, but they could be quite different from each other.
It's called Chartered Fintech Professional, and the whole idea is for all of us to understand each other and make this a better world.
Very good idea, and I hope the Turkish participants, the regional participants from Qatar, from Turkey, from South Africa, will follow these developments and will be part of it. We are a bit over time. There are lots of questions I have actually. It was great to learn from you, to get your experiences, your viewpoints. Thank you very much, Ms. Hawa, for sharing your experience from South Africa. I hope this is not going to be the last. We will have more. Same thing, Professor David. There are a lot to discuss in the cryptocurrency world, in central bank digital currency work. I have papers, but the more I work on it, the more I like it, actually. I mean, the more, and also I'm excited because when you see that, okay, something is happening, everything is transition, there's a new world coming up, it is quite exciting to be part of it, at least to understand it, because there is a kind of pleasure of trying to understand something. And we have 5-6 papers already on cryptocurrencies, on fintech, but still I consider myself that we are in the very, very early beginnings in terms of learning, because every day we have new tokens, new NFTs, new ideas coming. So we have a lot to discuss. Again, thank you very much, Professor David, Ms. Hawa, and thank you also for the organizers, actually, for giving such an opportunity to us to share and to benefit from our speakers today. Thank you very much, and enjoy the rest of the conference.
Thank you. Thank you very much.